just guessed. Let's kick it off with Tell Me Something Good. Let's actually go to Cindy first, because I know Cindy has something she wanted to share. Cindy, can you unmute? There we go.
Can you hear me now?
We can hear you.
Hi, good morning.
Good morning.
Hello. Looks like everybody's on spring break like the kids.
Exactly.
Tell you something good is, so last night, one of my general contractors referred me to a client he's doing work on. And you guys probably all know the neighborhood. It's that one that Mimi just sold that $4.8 million house in Loomis. It was that subdivision. And I went on a listing appointment against Mimi and Nick Sadak, and I got the listing. $2.5 million.
Congratulations.
Great job, Cindy.
Thank you.
That is freaking fantastic. So what's the listing price going to be?
Well, we're remodeling it right now. As of right now, 2.5 million.
2.5. Oh my gosh. Woo. Next level. Were you door knocking, by the way, or is this just how'd you get this client, by the way?
So actually, how I got it is it started off because my general contractor who I flip houses with used to clean carpets for all of our team's houses, and then he started flipping houses with me, and he was flipping this house and knew they were interviewing agents and asked them if they would interview me, and so actually my general contractor got me the listing appointments.
Boom, that third party referral. So what did they share why they went with you over the competition?
I did, but don't tell. They said Mimi was too bougie. They said the other two were too bougie. And this is the average home in this neighborhood is about $5 million. And they were just really looking for down-to-earth, humble people. And even though Mimi and Nick have been the only two realtors ever to work in this neighborhood, they thought they were too bougie, and I was more down to earth for them, and I connected with them and actually stayed at the house till 10 o'clock last night drinking wine.
Wow. That's so cool.
That's the key to closing listings is drinking wine with your clients.
Right?
Just sign right here. Yeah. Awesome. Well, hey, who else has something? Doesn't have to be a crazy listing. It can be like you met a client at an open house, or maybe you got a buyer pre-approved. Who has some wins?
I do. I'm excited, but I'll tell you what, it's kind of hard to follow Cindy's feeling good story there. That's one amazing show and tell. Way to go, Cindy. That's awesome. My little thing is I'm very excited that I was able to close a listing last week. I mean, a buyer last week who had zero credit 6 months ago. Zero. Woo-hoo. And thanks to Alicia Stearman and her team, they walked him through. This was a real hand holder. I mean, this guy had money, but it was all mattress money. And it's not an easy thing to go through, but the team working with Alicia and her team was absolutely stellar. They did such a good job. They were so patient, so loving, so kind. And this guy literally was just not tech savvy. We had to teach him how to upload things and send them. And it was a real hand holder, but it was one of those closings that you just feel so good afterwards because you were able to really help someone experience the American dream that really didn't ever think they could. So that was a really, really good one. He got a great property. It was a 5 acres up in Placerville with a little river going through it, a darling rehab house, and he is just as happy as can be. So that's my exciting tell you something good story.
That's fantastic. Round of applause. So by the way, how did you find that client? Where did that client originally come from?
A referral, good question. A referral from someone who I've stayed in touch with over several years. She actually moved away from the area, but she led me to him and him to me and put in a good word for me. And I'm very, very grateful.
Perfect. And this is a good point too. Like, just because you get a lead, just because it's a referral doesn't mean it's going to close in 30 days. They worked at this, right, for 6 months. And then finally, got the person into a home, right? So just keep in mind, it's not always the 90-day rule. You don't always get paid in 30 days, but if you work hard and you do a good job for your client, right, Laura, you get paid. So let's do one more. I think we saw a hand in here.
I met my first client from follow-up class, which was pretty exciting. I actually went to Alicia's Eastern hunt, and that's where we met.
Oh,
Or
really?
actually, I told her to come up there, and she met Alicia too. She wanted to meet the whole team pretty much.
Fantastic.
She got to do it.
Is she a buyer or a seller or
She's a buyer.
buyer? Awesome. Awesome. Yeah, round of applause.
Hey, Johnny, I've got one.
Yeah, let's go.
If you're not opposed, do an open house like I've been doing for a while, and some clients work, some clients don't, and the frustration has been just with 2 clients this last weekend, both kind of in a similar situation, needing to buy a home. And one of them said, well, we're debating between you and this other friend, agent who's a friend. I'm like, oh, the friend. And so I said, okay, so, but she wanted me to follow up to this house we really like. So I set it up, did all this work. And I spoke to her, or she wouldn't call me back, but she texted me and said, oh, thanks. We decided to go with our friend. And I was like, ugh. And I said, and I was like, Lord, how do I respond? Like, I want to be wise, but I don't want to, I wanted to like cause her to think, but not, piss her off, or, I wasn't worried about pissing her off because she was already gone, right, as a client, but I wanted to just speak wisdom. So I just said, no problem, just a thought. A lot of buyers go with friends because they feel obligated to the friend rather than their family. Do you feel like if that's the best decision for you and your family? And she's all blah blah blah. Anyway, so it didn't happen. So, but the interaction was fine. Then another one that just fell right in. She just followed what I said. Okay, let's do this, and she goes, okay, cool, no problem. And it just reminded me again that your tribe is going to find you. Like your tribe, like Cindy didn't have to be someone she wasn't trying to be bougie. She wasn't trying to be this or that. She was just her. She was just Cindy. And the client naturally attracted to her. Same with Michael, just said with his first lead. And the previous woman, forgive me, I can't remember now, I apologize. Mark and Lori. Lori Welch. If they're your people, they're going to find you. And that's both for agent attraction and for production. Just be yourself. Just keep doing the work. Just keep sowing the seed. Just keep doing what you're supposed to do. Your tribe will find you. The people who resonate with you, they're going to find you. You don't have to worry about having to turn yourself inside out to be what you think they need to be. Obviously, be as nice and approachable and people skills as possible. That's always on us to get better, to sharpen the saw. But bottom line is, you don't have to turn yourself out or be someone you're not. Just be who you are. Your tribe will find you.
Words of wisdom. Thank you, Tom. That's a good point. I don't know this is telling me something good, but I appreciate how you sandwiched it or bookended it, or had a real story and then a win, because that's the business. That's the business we're in. Are there any lenders on the call? I don't see Rodney or Alicia. J-Real, do you see anybody for our weekly lender update? Oh man, there are so many lenders that come in hoping to speak, and today could have been their day.
That's a
And
shot.
they all just stayed home. That's a shot. Rates are going up. Get your clients in contract now. This lender update brought to you by Johnny Jennings. All right.
Well done, Johnny.
Thank you. And then here, let's share the screen. We got some upcoming events. We got a ton of upcoming events actually. Oh, here we go. Let's go back to stop share. Rodney.
Yes, sir.
The man of the hour. We were waiting for you with bated breath. Can you give us a lender update?
Yes, the market is crazy. It's going up still. The word on the street is you're going to start seeing rates in up to like 6. I know. Yeah.
For owner occupied?
For owner occupied, primary great scenarios are going to be going up to about 6. Like soon. Could be, yeah, really watch where you're going. It really depends a lot on what happens with inflation, and the reports just keep coming out. The last one that came out was 8.5%. Interest rates always outpace inflation, but we're kind of having a false sort of inflation. We have the stagnant portion, right? But as we move through that, because the economy was shut down this time last year, so that's what makes it seem a little bit higher. As we get towards the last quarter, it's expected to instead of 8.5, it's going to be closer to 2. So then we should have rates, and I'm expecting rates to fall back, but that doesn't help us today.
Yeah.
So look, talk to your lenders, look for the new products that are out, look at some of the 10-1 arms, fixed for 10 years, and it goes adjustable. 7-1, same kind of thing for 7 years, are gonna be great options. It's gonna save your clients, you know, a few $100s a month.
For those who don't know what arms are, can you explain what that is?
Yes, it's an adjustable arm, but it's fixed for the first portion. So there's two components to the interest rate. There's a margin, which is kind of set by your FICO score, and then the index. The index is what you really want to watch the most because there's several different indexes that are out there. And there's a new one that came out during COVID, and it's called SOFR, SOFR. When it first came out, the interest rate, the index was at 0.001, right? Because it was brand new. And last time I checked it, it was at 0.5, so 0.5%.
Okay.
So the margins are a little bit higher than you would get what used to happen on the LIBOR or the T-bill or some of the different indexes that are out there, which are usually closer to like 2.25, 2.5, 2.75. The margins are probably on 3 or something, but your rates are going to be great. Why is that important? Because, you know, the index to watch is because they are more volatile somewhere than the others. So you want to kind of look at the histories of them and see, you know, how you feel for yourself in planning, right? Historically, most people used to move every 5 to 7 years. Right now, we're like 10 or 11. But we had, you know, a lot of extreme things in the economy and in the environment. So that I think will start to change as we move forward for lots of reasons. We will see more transactions start to happen, people moving. So, you know, work
Okay.
with your lender. If they were approved like 2 weeks ago, rates are continuing to jump so much that they may not be approved today, or they have to get a different program or some kind of structure.
Okay.
So, yeah.
All right. Well,
Sorry about
on that happy note, thanks for that,
But
Rodney.
deals are still great, right? They've gone up, right? You know,
Come on in,
from
Julie.
2s and 3s, and now we're at 5, you know, 5, 4, 5, 6. That's still historically a phenomenal rate.
At what rate does it get historically bad?
You know, I know my first house I bought was at 12%. I was excited when I got a 10%, could refi down to 10.
Really?
Yeah, so, I mean, yeah, if you look back historical, you know, you can show clients if you want to have that data, I'm happy to share, where they were up to 18%. You know, so they've just moved so quickly. I think they will start to stabilize by, you know, between now and June.
Okay.
But yeah, just pay attention and look for different options and tell them they're not married to that rate. You know, if it falls back, you know, affordability is an issue. They can get the house because it's still tight market with low inventory and lots of overbidding and lots of clients. Get the house, set them up with a plan on how to, you know, lower their payment later.
Mm-hmm.
Yeah.
Got it. Awesome. All right, everybody, round of applause for Rodney. Thank you for saving the day, coming in with that lender update. All right, so let me go back to sharing the screen. And we got a lot of different events coming up. So top women in real estate. Cindy, you want to talk on this really quick? I know you're doing some work. If you can't, I can. In fact, I will. Top women in real. Oh, there she is.
I'm back. I'm just in the car. Yes, so it is Top Women of Real Estate is going to be in less than a month. It is going to be at PCAR. It's only $10 and lunch is included, and lunch will be from Primo's, my favorite restaurant. So I'm super excited about that. And we're going to have 3 amazing panels. The first panel is going to be Rising Stars, and that's for newer agents under 3 years who are out there crushing it. Then we're going to have a mom's panel, and the third panel is social media. It's going to be a nice, fancy event. The last 2 years that we've done it, the tickets sold out quickly. So don't wait to get your tickets because there is a max only PCAR is allowed to hold. And I think it's 225. In the past 2 years, we sold out 225 very quickly.
Got it. So where do they go? Just go on Eventbrite and search top women in real estate, right?
Yep. And I also put a link in the Brent Gove team page as well for everyone.
Perfect. Perfect. Thank you for that. So that's coming up in just 2 weeks, or May 11th, Wednesday, May 11th. Then easiest way to make $250K. That's a fun title. I wonder who came up with that. Alicia and Darcy will be speaking on that next week. Don't want to give away any of the secret sauces, but these are 2 people who have made $250K and then some. So they're speaking from experience. This isn't like theory, right? So easiest way to make $250K, it's free. That's what we're going to be talking about next Thursday at the team meeting. Then we also have the Made for More Mixer coming up. I think we're closing in on 200 signups. So make sure you sign up before we run out of space. It's going to be April 28th from 5 to 8 at Crawdads. Just go to madeformoremixer.com or you can search it on Eventbrite. And then last and certainly not least, we got Dominate Your Market with Social Media at the Granite Bay Country Club. That's not next Thursday, but it's the following Thursday after that. So there will not be an in-person team meeting. We're all going to be hanging out at the beautiful Granite Bay Country Club. So make sure you register there because space is limited for that as well. With that, man, I ran out of things to share. They get to see my beautiful desktop. That's fun. I need to put a picture of a baby up there or something. So with that, let's bring up Miss Sherry from HWA. Everybody give Sherry a round of applause.
I just wanted to give you guys an update on our April promotion. I'm Sherry with HWA, home of the 13-month home warranty. Our top plan, the Platinum plan, we have a $50 discount on it this month. The Platinum plan gives you pretty much everything. It covers 120 items in and around your home. You can protect your clients from unknown pre-existing conditions. You have all those wonderful benefits like up to $5,000 of HVAC, unlimited refrigerant. To qualify for the $50 discount, which makes the Platinum plan $400, is just the buyer's email address and phone number. That's it. And the promo code of RE50.
RE50.
RE50, whether you're entering your own orders or you want to send them to me, the only thing I need is buyer's email, buyer's phone number, RE50, and you get that $50 discount.
Beautiful. And can you, J-Ro, can you take a note of this? What is your contact information?
Phone number 279-842-2767, or you can email me at Sherry, SHERRY, .jones@hwahomewarranty.com.
hwahomewarranty.com. Anybody have any home warranty questions about what things cover, what they don't cover, how to get a hold of Sherry? Any questions for her while we have her here?
The
Pretty
brochures
simple.
are on the table. Those are the new brochures. They actually include the terms and conditions also.
Beautiful.
Yeah.
So we're going to leave those in the team offices. So if you would like to check out those brochures, come on by. We'll have them in the offices available for all of you. All right. Thank you, Sherry. All right. Give her a round of applause. All right. So we've gone through the mixers. We've got Miss Sherry. Now for the woman of the hour, the one that we all came to listen to, Miss Ruby Bitzer. Please come on up. And Ruby, tell us a little bit about yourself. Give her a round of applause as she's walking up. You actually have a fun event today, right?
We do, yes. So our office just opened a new location in the same parking lot at the old E-Trade building. So we're doing a soft opening. Feel free to come by. It's between 4 to 7 tonight. So just to meet the other attorneys and, ask any questions, anything you want to.
Free advice.
Yeah,
you don't have to pay
exactly.
for it. You're not billed.
Yes. I
All
brought
right.
those with me today because I did some calculations for you. So
Beautiful.
what I wanted to speak to you guys today about, which has been actually coming up a little bit more often, is understanding the arbitration and mediation clauses in the contract. So I think there can be a misunderstanding of what those mean and if they're mandatory that your clients sign them. To start with mediation. So in the event, this is mostly going to come up if there's an EMD dispute or a failure to disclose issue. Those are kind of like two of the big ones that people are like, oh, let me go look at the contract and see what it says.
Mhm.
The first step is going to mediation. If you can't negotiate it and come to an agreement on it, then you have to tell your clients, okay, under the contract, you at least have to make a good faith attempt to mediate. There's a couple exceptions to that. They're actually listed in that paragraph. One is going to be small claims. So if you have an EMD that's the value is 10,000 or under, they can skip mediation and arbitration, or a failure to disclose. But usually, if you're going to deal with that, it's going to be more money than 10,000. So with that being said, probate, unlawful detainers, you don't have to go to mediation and arbitration. Everything else does. So you have to make a good faith attempt to mediate. Mediation is where the two parties, brokers are not considered a party, neither are the agents, obviously, so you don't have to go. It's not mandatory if you don't want to. I've had some agents accompany their clients just because it's a lot when we're as attorneys getting it, all the communication generally goes through the agents. So it's really helpful to have the agent there to say, no, I emailed buyer's agent on this day, what happened? So that's been really helpful for the clients as well. And it gives them a support system, basically.
So just make sure all communication, text,
Yeah.
emails and stuff gets over to you.
Yes, that's really helpful, especially if you're referring over a client that, I need to have everything so I know what to prepare for.
Okay.
And so when we get to mediation, it's non-binding and it's between a neutral third person, generally hired. It's generally going to be a retired attorney or something like that. That takes probably 60 to 90 days to get on schedule. You're going to have to file briefs beforehand, especially if you're dealing with a large sum of money. We have earnest money deposits aren't, they can be quite expensive. Failure to disclose can be in hundreds of thousands of dollars. So depending on the situation, it's not something that we take lightly. So I did, just so you guys can get an idea of what the costs are, because I think that's the most misunderstood part of mediation and arbitration is what the costs are for your clients. The average mediator, because you're paying for their time in addition to my time, is going to be between $300 to $500 per hour. And that's on the CAR Mediator's website. If you go to their mediator options in Northern California, most will require a deposit of at least $2,500. So in addition to their attorney's retainer, they're going to be putting in a deposit for the mediator as well. If you're going through a CAR mediator, which depending on if you want to or not, they, I think, require like a $400 deposit. And then I took 5 cases that we've done that we successfully resolved in mediation. All were pretty, I think, anywhere from $20,000 to $150,000 like amount in dispute. The average attorney fee cost for our firm was $7,800. They ranged from $3,000 to $14,000, and the average length of time was about 7.5 months. That's just for mediation. So imagine if we hadn't resolved it in mediation, then we start arbitration, because if you don't come to an agreement in mediation, you move on to the next step. And if you have the arbitration clause initialed, it's arbitration. And that's pretty much starting the whole case over. So there's no discovery in mediation. And for those of you that don't know, discovery is a process where we formally request documents from the other side. So if it's a failure to disclose issue, we're going to be requesting all of their records on their home. If it's a permitting issue, we're going to be requesting building records, building inspections, all those sort of things. You don't have to do that in mediation. It's not part of the process.
So with mediation, is it just he said, she said kind of a thing?
Essentially, with whatever proof you have. So I did mediation in November for an earnest money dispute on a non-contingent offer, and I'm like, why are we even here? The buyer canceled, but they want to take it. Now we're literally going to arbitration over this. And it's been 6 months and we still don't have it filed or even set an arbitration date for several reasons, but other attorneys can be very difficult to work with, especially in the Bay Area. And the sellers are my clients, and the buyer put in a non-contingent offer and canceled the day before closing.
Oh,
so it's a $30,000 AMD, and the lady's fighting us over it. So that's a whole other story, but regardless, to say my clients are not stuck in this process, and it's frustrating for them. So with that being said, if you do initial, there's a lot of pros and cons to arbitration, and I want to make this clear. The new contract kind of spells it out better. If you do have your client's initial the arbitration clause, that means that they're waiving their right to a jury trial or going to court, superior court in general. So there is no court after arbitration. The arbitration is binding and final. There is, even if you were to go in front of an actual judge in superior court, that's no longer an option. So there's a lot of pros and cons to that. Arbitration is a very expensive process. Yes.
So by signing that, they're waiving their right to arbitration?
No, they're waiving their right to a jury trial. So instead of, if you're not going to go to arbitration, you're going to go file in the regular court system, where you just go file a complaint, get on the schedule to see the judge. It's the regular process we all know. Arbitration is considered alternative dispute resolution. So you're not going to be in the court. You're going to be with a retired judge or a retired attorney. They're usually, seen a lot, 30 years experience. And then you're going to go, it's more of a private process, which is a pro if people don't want all their business out in public records. So Superior Court filing fee is $435 for most cases. Arbitration, you're looking at anywhere from, for their filing fee alone, from like $1,700 to like $2,500 just to file your complaint. And that's not including my fees, preparing the complaint. That's just literally the filing fee. So you're also paying the arbitrator. Their fees can range between $400 to $700 per hour. And they also come with administration fees. Depending on the amount of controversy, all of this is going to be depending on how big the case is. But it can literally go from anywhere, where did I have it? Administrative fees, not including arbitrator fees, not to be confused, two different fees for arbitration, is from around $1,500 to over $83,000.
Whoa.
Just for the administration fees. That's not including arbitrator fees. That's not including lawyer fees.
I gotta become a lawyer.
Yeah. So now depending on, it depends on, again, how much is in controversy, who you go with, how long it takes, but you know, there's no guarantee. We had a general contractor dispute and they demanded a $30,000 deposit up front from my client. And he was like, you've got to be kidding me. We haven't even started. And that's not even my lawyer fees. So it can be really expensive. People don't realize that it's actually a higher barrier to entry for people that really don't have a lot of money to put into this because they put all their money into buying a house, for instance. So,
So just to recap,
yeah.
if you do the mediation,
Mhm.
those costs are about $700-800 and 7.5 months to complete.
Yeah. Mhm.
Then if you don't get the resolution you want at the mediator, do you go to the arbitrator?
Yes.
And then you start more fees, more costs.
Correct.
And then after the arbitrator, it's done.
Yes. Yes. So if you spend $7,500 on mediation, we can't come to an agreement, that's a wash. Now you're starting all over again with the new set of fees. So some of my work could be repurposed, of course. I'm going to try to keep my fees down, but that's the progression of it. So as you can see, it really is beneficial for your clients to try to negotiate an agreement early on, because when you get to arbitration, excluding all this time you spend in mediation, you're looking at another 6 months to 2 years.
Oh, gosh.
So, and then of course, the fees that are, you know, going for that. So we did one arbitration last year. It took 2 years to complete. It was a failure to disclose in San Francisco. Again, the problem with arbitration is you can't appeal the decision, which is a huge con. So you don't have a jury of 12 people with, you know, saying you have more than one person on the weighing of the decision. Yes.
So if you do mediation, you have to do arbitration, or can you do mediation and go?
You can mutually agree to waive arbitration, or you can have your clients not sign the arbitration clause. It's all optional in the contract. A lot of times agents just think that they have to have their client sign or initial the arbitration clause because it's in there. It's completely optional. And most people just don't understand what it means or how much it actually costs to do that. So I would say 98% of them initial the arbitration clause, having no idea they're about to embark on this journey.
So how do you, I mean, what's the benefit to the seller to have the buyer sign the arbitration clause? Like, I'm trying to understand why. I know an agent recently that lost, there was a multiple offer situation. Her buyer didn't want to sign that part. And the sellers chose somebody else that signed arbitration, like in that contract.
Was that specifically because they didn't initial the arbitration clause?
They didn't get their offer chosen because they didn't want to sign that part.
Yes, to answer your
Okay,
question.
yeah, so I would argue that that's simply a lack of information on the seller's part.
Because it'd be more expensive for them too, right?
Absolutely.
Yeah.
Most people don't understand that. The courts really sell ADR as this efficient, quick way to avoid court. Not saying court doesn't take a long time and it's not expensive. I'll get to that in a minute. There is no great there's no great option here, literally none. So it's very frustrating. Nothing about this process is easy. I will say that I do my best to really be reasonable, as do most of the attorneys, you know, in my office. Most.
ARG?
Yes, ARG, most. But I've been able to resolve EMD disputes without even having to go to mediation. I've been, you know, so I do have luck. We do our first step is to do what we call a demand letter. And usually if I can get them to come to the table and they're reasonable and they're looking at their fees, they're like, okay, what can we sit here and work out? If you've already gone to the step of retaining an attorney, you're serious about moving forward. So I do have luck negotiating off the demand letters. I just negotiated a settlement for my client on a failure to disclose without having to go to mediation. I mean, it's taken like 6 months, but she's still not having to pay for mediation either. So sometimes it can work.
So basically, if you do like a show of force,
Mhm.
here's a lawyer, hey, this is serious,
Mhm.
like people are lawyering up, here are the fees, and then they have to go get their lawyer and start looking at the fees. They're like,
Right.
okay, shoot, let's just figure out what's the quickest, easiest, cheapest way,
Yes.
rather than go through
yes.
arbitration, mediation.
Yes, so
Okay.
sometimes, especially if they talk to a reasonable lawyer, they're gonna say the same thing I'm saying, especially if the dispute in question is not that high net of it, you know, if it's over 20,000, 30,000, are you really gonna pay me 10K to settle this? Like, it doesn't make any sense.
Yeah.
So we try to keep that in mind. We try to set that expectation for the clients in the very beginning. If they do, you know, some lawyers just like want to sue on principle, I highly discourage that. But it's not, because at the end of the day, it's just not worth it for their time and peace. So the failure to disclose in San Francisco, it was not my case, just want to caveat, because the firm's client lost. It was the seller. Again, we can't appeal the arbitrator decision. Arbitrator said that our client should have disclosed he had dementia at the time he filled out the SBQ and TDS.
He forgot.
Right.
Yeah.
Yeah. So you tell me where that, you know, mental health disclosure is on the SBQ and TDS, but
Yeah.
we can't appeal it. There's no appeal. And they ended up getting a $500,000 judgment because you got to pay for their San Francisco attorney fees as well. So usually the prevailing party has to pay the other party's attorney fees.
In
So-
mediation, arbitration. That's
And arbitration,
in
yeah.
arbitration.
Usually mediation, you're gonna pay for your own attorney fees.
Okay.
And then, but if you're going all the way through arbitration or to superior court, the prevailing party usually gets at least a portion of their fees paid for, if not all by the other party. So when your clients are weighing the options of they always ask me, what are my chances of winning? And it's such a loaded question.
Yeah.
I think it's strong, but you know, here we are. So they're not only looking at paying my fees 2 years down the line, but also potentially worst case scenario, opposing counsel's fees as well. So that can be, you know, a risk that most people don't want to take and they'll end up settling.
Crazy.
Very crazy. And so you can waive, both parties can waive the requirement to go to mediation if they want to. And the reason that they put mediation in there is because they want you to do at least a good faith attempt to mediate to preserve your right to collect attorney fees at the end, which can be substantial. So you definitely want to at least send a letter or an email or something saying, let's go to mediation in writing. If they say no, then you can move forward and you still can preserve your right to collect attorney fees. So I know that's a lot of information.
It is.
But the real quick, the alternative to that is superior court, which is the traditional court process. And like I said, the initial filing fees, it's much cheaper. It's around $400. But I was in Contra Costa County last week and they set their first trial for July of 2025.
Whoa.
That's how backed up. Sacramento's trials are a year, between a year and a half out right now. Placer is about a year out. So you're looking at, from the time the complaint gets filed, maybe a year to two before you even get to trial. So that's also another issue.
Is arbitration any faster? Like,
It can be. It depends again on how complex the situation is, how available the parties are. There can be a lot of hiccups, but it can be in theory. Yeah.
So what if I don't know if it's just our brokers or whoever, but they don't consider it an executed contract if one person has signed that arbitration clause and the other one chooses not to. They're saying like it's all or nothing, right?
For
Is
the
that-
arbitration clause.
Yeah.
Yeah, that's correct. It's all or nothing. Both parties must agree.
Or not, agree not.
Or, yeah, one party can agree and the other party doesn't, then you're not going to arbitration. It has to be both parties agreeing.
Okay. So I threw this up here. How would you recommend they fill this out?
Well, in all honesty, the liquidated damages clause, absolutely initial that's gonna cap your liquidated damages at the earnest money deposit at most 3%.
Okay.
So I would always say, go ahead and do that. But for the arbitrate, mediation's gonna apply no matter what, unless you're small claims. Arbitration. I don't wanna say I can't tell you how to do it, because it's not my decision, it's ultimately your client's decision. I would just give them the pros and cons and let them decide if that's something that they would be interested in, and if they want more information, my office does free consults, and I'll be happy to explain to them the pros and cons of it. Yeah,
Let me ask it in a different way.
Yeah.
You're my client.
yeah,
Would you like to sign?
no.
Okay.
No, I wouldn't.
Okay.
Because I think my biggest problem, aside from the fees, is gonna be that there's no appealing the decision.
Right.
Absolutely, so you're stuck. And arbitrators are people, they make mistakes, they don't see it your way. You look at your client and say, I'm sorry, we don't agree with this, we took it all the way, and you're gonna have to pay a $500,000 judgment now, and I can't appeal it, even if I think they got it wrong. Judges, we have the law, and then that's how the judges actually apply the law is two different things. So that's the biggest red flag for me in any arbitration, especially when it's so, arbitrators are people, we all have our biases. One, I did failure to disclose, where it was a sober living house next door, or not sober, it was for transitional housing for homeless and mentally ill. My clients had 2 young girls, like 3 and 6. Sellers knew about it, didn't disclose. You think it would be an issue, but it's very debatable because it gets into fair housing rights and all that. But if you have an arbitrator that's, especially for homeless people and advocating for homeless, they can have that, bias underlying that if they're going to agree with your client or not. It doesn't really matter at that. If the law's in a gray area, it can go either way. So that's why if I were doing it, I would say I want to at least go to court, because at least I have an option to appeal, or go through a jury with your 12 people. And I guarantee you there's going to be parents on that jury. So.
Wow. Any other questions for Ruby? I do. I have one question. Ruby, how do we get a hold of you?
Yes.
And I've got a question after that, Johnny, if you're not opposed.
Okay. Not at all. Let's do the cell.
530-720-2133.
2133 and your email.
rbitzer@attorneys.com.
rbitzer@attorneys.
Yes, with an S, re.com.
re.com. I was close.
Bitzer, B-I-T-Z-E-R.
And again, they got the event happening from 4
4 to 7.
4 to 7. It's just in the same parking lot as our office. So if you remember the old E-Trade building, it's now, I think, does it say ARG on it now?
No, the HOA made us take it down.
Really?
So, yeah, they said it was outside the limit of the
Sue them.
Yeah,
Sue them,
right.
Ruby.
Yeah. No, HOAs are the spawn of the devil. I don't, yeah.
Okay.
That's a whole other presentation.
That is. Tom, what was the question that you had?
Ruby, what you're saying is just gems of wisdom. So appreciate it. It seems like the statement that really is the clincher is when you said there's really no good option here. It seems like the only ones that win in a lawsuit are the attorneys. Nothing against you. Like Johnny said, we should all be attorneys, maybe for a side hustle. But
I'd kill
it seems like, okay, we're damned if we do and we're damned if we don't. So as a real estate agent, I don't want to advise my client on what they should and what they shouldn't do, because that has obviously exposure itself. But what do we do? I mean, like, in the past when I was with KW, that are different coaches that, oh yeah, always make sure they sign, and it's a red flag if they don't sign, check the arbitration boxes on the RPA. But then it sounds like, if they do, like your 2 points, number one, it's expensive. Number two, there's no appealing. That's huge. But again, if they don't check it and they go to lawsuit, well, there's major fees with that. The only upside, it seems like, is that it's appealable, but they both suck. Am I missing something?
Nope. No, not at all.
So what's the average cost filing a claim, like going to like the law?
Through the lawsuit, that I can get that information for you. It really, again, it all depends on how the other side acts too, how long the courts are going to take, how much discovery is involved. So it really can vary quite substantially. Sometimes filing a lawsuit's enough to get people to come to the negotiating table.
And the filing fees cheaper. It's like
It-
400
yeah,
bucks,
you-
you said?
The thing with the court is because the judge is a public, we paid for it in taxes. We don't have to pay for the judge's time. We just pay for filing fees. So that is a reduced cost if you look at it that way, instead of paying for two people or, half of the arbitrator or however it gets split up. You're only paying for your attorney until a decision's made. So that is, and again, with the arbitrators and their administrative costs, that is really crazy to me. That's another expense of arbitration. So for as far as, advising your clients, again, I would just tell them there's, pros and cons to actually arbitration. A little pet peeve of mine is with the car lawyers, they're all transactional, or they haven't been in the court system in a long time. So it's easy for you to call them and them say, well, this is in theory what's supposed to happen because I'm in court every week. I see this every week and I'm like, this is different than what you guys are telling agents out here. So we're in the trenches, so to speak. And I think they're kind of far removed from it. So that's probably why they gave you some different advice. But like I said, if your clients are really, struggling with that, if they can't find it on their own, if you could just Google how expensive is the average arbitration, it'll come up to like 8 to 10 grand or something for the fees alone, not including your lawyer fees. Like it's very Googleable, all of this information is, if they want to, encourage them to do their own research, contact an attorney. It is a big decision, especially it's easy to sign the long thing after something goes wrong. So
Yeah. All right. Last thing I'll add about for Miss Ruby is she's very generous with her time and she has given you her contact information. Please do not abuse that. If you have like any one-off legal questions or anything like that, like I'll let her figure that out. You guys can figure that out, but don't be like calling her off to every listing appointment, every buyer agreement. Like, hey, they won't sign. Can you tell them they have to?
I will say everybody's been great here. I think I've handled a couple questions or consulted with a few attorneys and or clients of yours, and everybody's been really respectful. So I do appreciate that. Thank you.
Good. That's what we like. That's what we like to hear. All right, everybody, give Ruby a big round of applause. All right. Well, that's all I had for today, Miss Alicia.
Yay, I'm so glad. I'm sorry I'm late, guys. If you have a client looking at new home construction, okay, we can lock up to 1 whole year. We do not charge an upfront fee, unlike every other bank. So most banks, it's deposit. They make you give them a deposit. It's non-refundable, and then they add to the interest rate. We do neither. So there's no add to your rate, and there's no upfront fee. We also match the builder incentive. So if the builder's giving him $5 grand, we'll give him the $5 grand, and we can lock him for up to 1 year. So I included for you guys so you can get an idea of what that looks like. Now here's the coolest part. You can do a float down 2 weeks before close. So if rates do go down, they're not trapped. Can I negotiate it? Yeah, I can actually negotiate it too. So if I'm locked in for a year and they come forward with another proposal from a bank, I can renegotiate my current lock, and there's no cost to the client to do that. So I like to use it as the analogy, let me be the ceiling that we create while your home is being built. Let's just create a worst case scenario. It'll never get worse than this. Great. It uses anxiety. It makes their fears go away. They're no longer fearful they're going to lose the house. So I just want to make sure you guys were aware of this. And then I did bring for everybody that's here, I know I had these before, but we updated them. This is just, giving you guys mortgage insurance factors, some different programs. It's a cheat sheet to kind of stick in between your seats. It has the derogatory seasoning. So if you're like, God, this client tells me they have a bankruptcy 2 years ago, can they get financing? It has that little chart for you. So I brought these for you guys laminated so they could withstand your driving around. If anybody wants one before you go.
So there's no upfront cost, but what's the cost?
So there's a chart that you can look at. So if the client only needs 90 days, let's say as an example, it's 0.25%.
Okay.
If they need a full 1 whole year, it's 2.5% cost. But now they don't have to pay that to us right now. If we keep the same lock and don't do the float down, then the 2.5 will be their closing, included in their closing numbers. So the cost is included at closing. The reason the upfront piece is important is clients get the fear of, well, can I back out just in case someone else gives me a better deal, or can, you know, people want one foot out the door just in case. They don't want to do a super, you know, solid commitment. Well, that's fine. Now, what I like is if they're ever gonna cheat on me, I go, hey, give me that breakdown so I can go match it, right? And then I go back and renegotiate with the lock desk, because it clearly states in our lock policy, we don't want to lose a deal. So if the person's already locked with us and they're getting offered a better deal, then I can go try to match it for them, so we can retain them. But so these are the factors you can see. And I just did one, a veteran, we locked him at 4.5, but we were like 8 months out, and his peace of mind alone. And typically what I say to them is, what's your max payment, what's your max down? As long as I can get the numbers to fit in that, now we've created that ceiling. So now we know that's the worst case scenario. So it can get better, but it's never gonna get worse than that. And it's like night and day, their peace of mind.
And what are you seeing rates right now? Are you seeing them going back, going higher?
So it's gonna be just like a staircase. It's gonna be just like a staircase. Just last week alone, it went down 0.4, went up 0.5. This week already, it went down 1/4, it went down 1/8, then it went up 0.4. So it's literally just gonna be like this. And that's what I'm seeing. The overall trend is of course up. But with prime rate going up in increments, with mortgage rates going up in increments, prime rate controls auto loans, student loans, credit cards, everything. There's going to be a threshold where you start to see defaults. You're going to start to see bankruptcies. And that's not what they're trying to. They don't want that. So I do see that there's going to be. It's definitely going to come back down in the next 24 months and end up back in the 3s. Right now, I think appreciation, they're trying to slow down appreciation big time. Again, 15% is so unhealthy. We're already at 3% this year. The goal is 5% for a year, not in 90 days, right? So they have to do dramatic things to get appreciation to slow down, to get people to not bid 100 grand over asking. So you'll see, and I think I brought this up before, they started making it very ugly for investors in banking. Now they're trying to implement taxes for investors, and they're also offering new programs for buyers. Grants are coming out. I think they want the buyers in the market and less of the investors and in the market. So I definitely see a staircase. We're going to have fluctuation for sure. Plus, I locked a rate in the 3s yesterday on a 10-1 arm. Keep bringing those up to your customer, because not a high risky 3-year arm or a 5-year arm, but a decade, a flipping decade. Markets take a decade to cycle. So if you can get rates in the 3s for 10 years, that's good enough in my book. It's enough safety for the customer.
Is there any downside like when they go to sell that house? Say it's 7 years from now, or 8 years, or 9 years from now, right? They go to sell that house. It's just like a normal pay off the mortgage.
Yep.
Okay.
Yep, nothing special. Now, like a 10-year arm, once it becomes adjustable, I had an adjustable loan for 9 years of my life. It was full adjustment mode, but they can only adjust once a year or once every 6 months. It's not like it's adjusting every single month. It never, not one time in 9 years, went above 3.25. Not one time. It was the cheapest loan I'd ever had. But people have this fear because a lot of really nasty subprime loans were adjustable back in the day. These are basically mostly A paper. So they're a lot less risky. There's a lot more protection on how often they can adjust and what it can adjust to. But I tell the client, like, don't ever keep it when it's adjusting anyways, because it causes them too much fear and anxiety about it. I'm like, just refinance it. At any point in 10 years, you just have, so I go, when's the last time you refinanced? When's the last time you refinanced? When's the last time you refinanced? You never made it 10 years, not one time, right? And when you bring it, you're right, okay, you're right. Okay, well, best predictor of the future is the past, right? If you've never made it 10 years, then a 10 years should be plenty of time for you. And then that's when they go, okay, you're right. But a point savings is so much savings going from a 4.9 to a 3.9. It's like $400 a month in their payment, right? That's huge.
Alicia, if they do the rate lock for a year, and then let's say they lock in at 5%, and then rates do drop, and then just the rates out there are 4%, do they still owe that fee if you floated it down after a year?
They will.
Okay.
The fee piece of the puzzle won't go away. The
Okay.
fee piece of the puzzle won't go away, except loophole. I'm all about loopholes. I can unlock and wait 30 days and relock, and the fee goes away. But I'm only gonna do that if the market, if it's safe to do. So part of it is that I show them, it's like, if you're already getting an incentive of $5,000 as an example, use that toward this long-term lock. Most of the time, I'm finding they don't care as much about the fee as the rate.
Okay.
People have money right now. So the fee is very easy to eat up if you think about it. And if I can get them the same rate, whether they borrow 80% or 85%, either one, if I can get it to be the same rate, that 5% just paid for your long-term lock. And most people, the security is what they want. I have them calling me, did you just see the news? I'm like, what did the news say today? The news doesn't do mortgages. And they don't know what the rates, they don't understand what's going on, and oh, thank you so much. It feels so much better. Okay. But I use the daily rate lock advisory, guys. This is just something you can Google daily. When my clients call me super fearful, I go, well, guess what? Let's check what the economists are saying. And I pull that up, but it'll tell you tomorrow this is happening, because rates typically change 9, 11, and 1 o'clock during the day. And it'll tell you what the reports are that are coming out, what it's predicted to do, and, what the changes are. But that way they never blame me. I go to, I'm not an economist. That's not what I do for a living. But here's what the economists are saying. But it deflects it off of you guys having to be a know-it-all. And then go, hey, this is a really great resource. And then if they're super fearful, they can just go on there every single day if they want. And go, it got a little bit better today. Now the adjustments are to the cost, not the actual rate itself. So when it says in there, 0.25%, it went down 0.25%. They just mean 0.25% in the closing costs, not the actual rate itself. It takes like almost 0.5% to a point to get the actual rate to change a quarter. So the cost is what changes on a daily basis.
And to add on to what Alicia said is that the biggest thing that she said in there was that so you guys don't have to be experts, right? Because raise your hand in this room if you're a lender. Okay, that means that the rest of us aren't, right? So when you're working on deals, how much of us agents love when a lender gives realtor advice? We just love it. No, we don't, because lenders aren't realtors, right? And so when your clients start asking you about lending questions, just give them to the experts. Don't try and say something to put your foot in your mouth and get them all. You might think that you're helping them, but you might end up giving them a bunch of anxiety, as Alicia or the lender that you're working with gave them a different viewpoint, right?
100%.
Just give them to the professional with it.
A really easy, super helpful thing to do when clients are like, should I buy right now or should I wait, right? If last year was 15% appreciation, I go, let's just be very conservative, go with 5%. Okay, you're buying a $700,000 house, 5%, you're gonna make 35 grand this year. Yeah, I know your payment's about 200 more, that's 2,400 this year, but you're gonna make 35,000 and it only cost you 2,400. They go, okay, yeah, that makes a lot of sense. So if you aren't in the market, you just lost that 30,000, right? And it opens up their eyes to understand that there's a bigger picture here. A couple $100 a month on your payment isn't worth losing $30,000 a year. And that's being conservative. We're being conservative. We're already at 3% year to date. So then they can grasp the concept and understand it's always a good time to buy.
There you go. On that note, you good? You good, Alicia?
Oh, yeah, thank you guys.
All right. On that note, I know this was a bit of a more heady kind of day with a lawyer and then like a lawyer, Alicia over there, lender lawyer, right? But hopefully you got some value out of that. We'll see you next Thursday. By the way, Alicia and Darcy are going to be speaking next Thursday on how to earn $250K. All right.
Excited.
Yeah, it's going to be good. All right. With all that, have a good